Welcome to the deep dive. Today, we're jumping into the global markets for June 24th, 2025. We'll be focusing particularly on India and the US.
Yep.
And our mission, as always, is to sift through all the reports, all the news, and give you the core insights. Basically, a shortcut to knowing what really mattered today financially.
And June 24th was fascinating. The big story, really the catalyst for almost everything, was the talk of a Middle East ceasefire.
Right.
It's amazing how one geopolitical development like that can just, ripple outwards. It hit crude oil prices hard, and that immediately changed the mood, the global risk appetite.
It really set the stage, didn't it? So let's start with India. How did the markets there react? What did the indices show us?
Okay, so India's Sensex, it finished up about 158 points, closed around 82,055.
Yeah.
And the Nifty 50, it ended near 25,044. So that's roughly a 0.3% gain, 0.29% to be precise. Positive, but the real story is under the surface.
Exactly. You got to look at the stocks and sectors driving it. So for the Nifty 50, who are the big winners? What was behind those moves?
Well, linking back to that ceasefire news, Adani Ports had a really strong day, up somewhere between, say, 2.9% and 4%.
Wow.
Yeah, easing geopolitical fears, better trade outlook, that helped. Tata Steel was also up over 1%, benefiting from that industrial rally, general commodity optimism.
Makes sense.
And in banking, Kotak Mahindra Bank gained between 1.7% and 2.1%, showing some good relative strength there.
Okay.
Ultratech Cement also climbed over 1%, signs of infrastructure activity picking up. And we also saw Grasim Industries and Geofinancial do well in the broader space.
Got it. And on the other side of the coin, who are the main losers in India?
Well, it directly ties back to the oil price drop. ONGC was down about 2.9%.
Right.
And Oil India fell even more, around 4%. Predictable given the sharp fall in crude.
Sure.
IndusInd Bank was also down about 1%, maybe some mixed flows there. And then you had Power Grid, NTPC, Trent, HCL Tech, all down around 1% to 2%. Kind of sector-specific things, maybe some tech caution, utility rotation.
So looking beyond specific stocks, how did the different sectors perform overall in India?
Okay, so sector-wise, Nifty Metal actually led the gains, up about 1%, riding that commodity wave we mentioned.
Mm-hmm.
Banking, including the PSU banks, saw the Nifty Bank Index climb 0.7%. People seem pretty confident about credit growth.
Okay.
Auto and consumer durables were also up around 0.7%. Domestic demand seems to be holding up.
Good sign.
And interestingly, the real beneficiaries of the oil drop were, the oil marketing companies and airlines. Think Indian Oil, Farad Petroleum, Interglobe Aviation.
Ah, right. Lower fuel costs.
Exactly. They jumped between 2.9% and 3.7%. Big moves. But IT services were, mixed. Some profit-taking, maybe concerns about global demand, and media was slightly down, about 1%.
Gotcha. So let's zoom out again. What were the big macro forces pushing and pulling the Indian market on the 24th?
Number one, absolutely, those Middle East ceasefire reports pushed oil down to like $69 a barrel. That's a 6% drop in just 2 days.
Huge for India.
Massive. Eases inflation worries, supports stocks, helps the currency. And speaking of the rupee, it strengthened quite a bit, about 0.9% to around 85.98 per dollar.
Okay.
Now, that softer dollar helps importers, obviously, but it does put a bit of pressure on exporters like, the IT guys.
Right.
But overall, the sentiment shift likely attracted more foreign money into Indian stocks.
Yeah.
And maybe looking down the road, if inflation stays lower because of oil, the RBI might get a bit more accommodative, maybe lean towards growth-supporting policies.
Okay, that paints a really clear picture for India. Let's shift focus now across the globe to the U.S. How did Wall Street react to these same events? What was the big story there?
Well, the U.S. market had a really impressive day. The S&P 500 gained about 1.1%, closing near 6,092. That's getting close to a record high again.
Wow.
The NASDAQ composite was up even more, about 1.4%, near 19,912.
Yeah.
And the NASDAQ 100, the tech index, actually hit a record close.
Record close, okay.
Yeah. And the Dow Jones wasn't left out either, up a solid 1.2% to around 43,089. So a really broad rally. The question is, what was lifting everything?
Right. So who were the stars in the S&P 500? Was it just general risk on, or were there specific company stories?
It was definitely risk on, but yes, specific stories played a big part. Tesla just surged, up 8.7%.
5%.
Yeah, huge move. Combination of news about their autonomous driving, EV developments, and just that broader rotation back into growth stocks.
Makes sense.
Arista Networks was another big tech winner, about 6.8%, signals strong demand there. Owens, Illinois gained over 6%, maybe some M&A chatter or an earnings beat.
Interesting.
Advance Auto Parts climbed nearly 5%, kind of a consumer defensive play, benefiting from lower gas prices, maybe putting more cash in pockets.
Good point.
And Estee Lauder was up about 4.5%, part of a consumer goods rally, as those bigger economic fears eased a bit. Also worth mentioning, Carnival Corp had strong results. Uber got a boost from driverless trial news, and MasterCard Fiserv gained on some stablecoin collaboration. Lots going on.
Definitely. And who felt the pain in the U.S.? I imagine energy stocks took a hit there, too.
Oh, absolutely. Just like in India, the biggest losers were energy names hammered by that crude drop. Halliburton down 6.5%, Schlumberger down almost 6%.
Ouch.
Yeah. Murphy Oil, Helmerich & Payne, Devon Energy, all down between, say, 4% and nearly 6%. And also defense contractors. RTX, Lockheed, Northrop Grumman. They were down maybe 2-3%.
Right, the ceasefire hopes hitting them directly.
Exactly. Reduced geopolitical tension isn't great news for their order books, at least in the short term.
So, stepping back from individual stocks again, what did the sector picture look like in the U.S.?
Well, tech and the big mega caps, think Broadcom, NVIDIA, Microsoft, they had a strong day. Lifted by earnings optimism, maybe a less volatile environment helps too.
Okay.
Travel and leisure, so airlines, cruise stocks, they rallied hard on Middle East news. Makes sense.
Yeah.
Consumer discretionary showed some strength, but it was selective. Helped by those lower energy costs, boosting spending power. And as we discussed, energy just got slammed. Sharply underperformed. Oh, and crypto stocks like Coinbase and MicroStrategy, they were up too, following Bitcoin's rebound.
Interesting mix. Now, what about the bigger macro picture, specifically for the U.S., beyond just the ceasefire news?
Well, the ceasefire was definitely the main event globally, easing risk premiums, knocking oil down 6%, boosting risk assets everywhere. But the Fed's outlook is always lurking right.
Always.
Powell's been cautious, and the market isn't really pricing in a July rate cut, maybe a 20% chance. So that's keeping bond yields somewhat elevated.
Okay.
And looking ahead, key data is coming up. The final Q1 GDP number and, crucially, the PCE inflation report. That's the Fed's favorite inflation gauge.
Very important one.
Definitely. Also, China's manufacturing data wasn't great. PMI around 48.3, suggesting contraction. That points to some global demand headwinds, maybe making investors a bit cautious about cyclical stocks.
Got it.
And finally, the weaker dollar helped flows into emerging markets, as we saw with India, and money kept flowing into U.S. stocks too.
Okay, so we've covered a lot of ground. India, the U.S., the drivers. But let's bring it back. What does this all mean for you, the listener? What are the actionable takeaways here?
Right. Let's try to synthesize this. For your core holdings, if you're in strong momentum stocks like Adani Ports or tech leaders like NVIDIA, it probably makes sense to stay put for now.
Okay.
But maybe consider trimming a little if valuations look really stretched after a run like this. Just prudent risk management.
Sensible.
For adding new money, maybe look to buy small dips in solid banks, Kotak, HDFC, ICICI in India perhaps, but always watch their commentary on loan quality. Same for tech leaders. Maybe add on dips, but be very mindful of valuation.
What about shifting between sectors?
Yes, sector rotation. If you sense global risk appetite is fading, you might think about shifting some money out of cyclicals like metals, capital goods, and into more defensive areas or consumption stocks and energy. Probably underweight that for now, or at least hedge your positions until oil finds a clearer floor.
And the currency impact.
Good point. If you have IT stocks sensitive to the rupee and the rupee keeps strengthening, maybe consider hedging that currency risk or reducing exposure slightly.
And for traders.
For shorter-term moves, keep those technical levels in mind. Nifty support around 24,850. Resistance maybe 25,200, 25,250. For the S&P, watch those recent highs, 6,000, 6,100 area.
Right.
And finally, always good to have some defense. Maybe some allocation to safer assets or options, just to cushion against any sudden shocks from policy or data surprises.
That's really practical stuff. Okay, looking forward then. What should we be watching for tomorrow, June 25th? What are the key cues?
Okay, several big ones. First, the Fed minutes from their last meeting. That could definitely move bond yields and anything sensitive to interest rates globally. Then more U.S. data. That final Q1 GDP revision. And the big one, PCE inflation. Markets will be positioning ahead of that. Expect some volatility.
Right.
Middle East news, obviously.
Right.
Any change in the ceasefire situation will immediately hit oil and risk sentiment. Keep an eye on that. Also watch China and Asia for any new PMI data or stimulus talk that impacts commodities, tech supply chains.
Okay.
In India, watch for any RBI comments, local inflation data. Also, the HDB financial IPO list tomorrow could impact banks.
Right, the IPO effect.
And European data like PMIs or any comments from the ECB could influence the global mood too.
So overall market bias.
For India, probably mildly positive if the global risk-on mood holds.
Yeah.
But caution will return quickly if bad data hits or tensions flare up again.
And the U.S.
U.S. might be a bit range-bound, waiting for those Fed minutes and PCE data. Expect continued sector rotation. The main takeaway for you is expect potential volatility around data releases. Plan your entries, plan your exits, know your risk limits.
Good advice.
Yeah, watch the overnight futures, Asian markets for early clues. And keep some cash or hedges ready to deploy if we get dips on bad news.
We've definitely covered a huge amount today, from, the nifty details in India to the S&P's push towards records and how that one geopolitical event shakes so much. Hopefully this gives you a really solid grasp of June 24th.
Yeah, and if you connect it all, it just underscores how linked everything is globally.
Yeah.
Oil prices, tech stocks, central banks, geopolitics. It all feeds back. And it raises that ongoing question for you, doesn't it? How will this constant interplay between risk sentiment and central bank signals keep reshaping which sectors lead? And what does that mean for how you need to think about these markets?
Great point to ponder. We hope this deep dive was a useful shortcut for you, helping you get truly informed. Keep these insights with you this week, and remember, there's always more information out there ready for another deep dive.